Good afternoon, everybody, and welcome to Learn to Trade live on the US Open. This is a little preview before the main show starts. Now, I'm just going to double check everything here. Make sure I'm sharing that and doing that. Just want to double check you guys can see my screen, which I think you can now. So, we have had data points, and there are more coming. We've had data points from Europe, and we will be looking at data points also from the EU. Hello, Swee. How you doing, buddy? Just double checking. I think it's only you and I at present, Swee. Geoff will be along, no doubt, very, very shortly. There he is.
Whoa, sorry, I'm late. I'm late.
Oh, you're not late,
very
mate.
Important date.
You're not late. You're creatively on time.
Is that what it is?
Yeah. SF, how you doing, buddy? So we are really looking at a market which has been pretty stationary since we last spoke, mate. The DAX we're looking at
Give
there.
the SH1Ts, mate. As a matter of fact.
Oh, is it really?
Yeah, it's got to come on, get a move on.
Well, I don't think we're going to get a move on for at least another hour and a half, but we'll see what happens there. We talked about the Kakaron earlier on, and somebody was suggesting, I think it was Dennis, suggesting that there's a possible short on here, which I'd have to say I do concur with. It would be a very tricky one. Now, initially we were talking about maybe playing the break of that low there, but then the market took off again, and it's just starting to weaken just a little bit, but it's really just floating around the important level of resistance here. It's just slightly above, but you can see how important it is here on the daily chart. So we're just slightly above this price here, and for this to turn around to show any real significance, I would suspect that the numbers we're about to get would have to be pretty abysmal. We might just float around this area and continue to do so. But let's check the numbers that we've seen today. Have you got anything really urgent, mate?
No, mate. I think I've shared everything that needs to be shared at the moment, and nothing really pending. No.
Okay. All right. Well, this is where we are at. This is the story of the day. So the print of the day is trade balance for Australia, negative 4.6. And I did see a little story about China. What are China banning? They're banning something from Australia, or is that?
Just another one, mate.
Yeah.
What's this one? I can't remember what it is. I think it's more another thing on barley. Barley, not B.
Yes, I think that's what it was, actually. I think you're right. I'll have to see if I can look into it. Problem is, I read these stories.
It's just another flexing of the muscle. I've been speaking about this for months, and nothing's really come of it, to be honest. And until they start, they're buying up iron ore as though it's going out of fashion.
Yeah.
So until they start putting tariffs or, pardon me, or sanctions on things like iron ore and coal, which is really the major exports to China.
Yeah.
And yes, of course, we're talking billions of dollars in things like barley and beef and wine. They've also attacked the wine industry, telling us that we're selling wine too cheap in China. And I guess that's got kind of certain echoes within my own brain, because it's probably sometimes cheaper to fly to China and buy wine than it is to go across the river here and buy Tasmanian wine, from where I live, and that's a fact. Is
it really?
Absolutely.
Wow.
Well, take away the flights; they probably have to fly me there, but I could definitely buy, although I'm pretty sure old matey across the road, who is an organic wine producer, Pretty sure he doesn't sell to China, but those that do and take advantage of that massive market, of course, would sell that at a heavily discounted price as compared to what I can buy it here locally. It's just
Right,
incredible.
right.
That's not unfamiliar territory, because China, well, put it back to everything that's scalable. How much do McDonald's pay for their beef off the farmers, right? Versus what you pay at the supermarket. The price is incredibly different. If you go to buy, what else do we export? Well, let's say a kilo of barley, for instance. If you went to the local barley supplier here in Australia, you'd probably be paying, I don't know, I'm guessing, and I'm probably a long way off the mark. You'd probably be paying something like, let's say, $1 a kilo.
Yeah.
But in China, you're probably paying the equivalent of a third of that.
Yes.
And that's the way it works.
Yes. Yeah.
Because they're consuming far more, or their trade and their demand is worth far more than the domestic demand to
Yes.
the growers. Well, actually, and there goes the thing. It's not necessarily going to the growers. It's going to the people who actually do the deals, the middleman.
Well, talking of growers, actually, there is something I want to bring in the US show for everybody, just to kind of have a look at and have a think about. I think it's a product at a very, very attractive looking price, and it looks to me like it could have some fundamentals which could sustain a healthy rally. So I will bring that in the US show. And really, that's what we're going to be talking about for the next few minutes here. Just talking about what's going to be coming up in the US show. We're starting in around about 23 minutes now for the US show, and we're just having a quick look at these numbers and just seeing if they've got anything that might relate to some decisions that we'll make during the US Open. And I mean, if you're in a few trades, Geoff, but just to kind of recap what we got here, we got German final services PMI at 52.5, and I read the detail on that, and it is still not particularly healthy. There's still plenty of unemployment going on, and just a lack of growth when it comes down to employing people, and there still seems to be a little bit of nervousness.
Just ticking above the growth area, though, aren't they? Just hanging on.
Really. Oh yeah. I mean, generally speaking, Spain, Italy, and France. Well, France above the growth area, but Spain and Italy still having a massive struggle. And it's again, I read the reports on all of these, and Spain's biggest issue is the travel sector. It's struggling to get people back to the hotels, and it's struggling to provide those services that it so desperately needs, the tourism that it desperately needs.
Yeah.
To fund its economy. So Spain struggling, Italy struggling, France is weakening somewhat. Germany seems stable, but the Euro final services PMI just above the growth number of 50. Final services PMI from the UK, a little bit of a shrinking, but 58.8 is a pretty good number. So that may well show that the UK could be growing a little bit faster at this stage than the EU. Or certainly some of the big guns in the EU. We have the Spanish bond auction, the yield at 0.05%. Don't know why you'd want to own any government bond at that particular price, but I suppose it might be a play that you would consider if it's hedged out a little bit of risk somewhere else. Retail sales also from the Eurozone, 1.3%. And looking at that as well, looking at some of the detail, it was the textiles and clothing stocks that really, clothing products that did very, very badly. Interestingly, tobacco, food and beverages were still fairly healthy sales there. Now, I don't know, they've lumped them all in together. So I'm not saying that everybody in Spain and the rest of the Euro bloc are smoking themselves silly to get through this, but certainly the food would have to be probably a big chunk of that, you would think, but tobacco being lumped in with that. suggests that particular product area is doing okay. And that's going to lead us to what I want to talk about in the US show later on, actually, mate. I've got a product that I think is really interesting, and I think it'll be something that you'll be interested in as well.
Okay.
French 10-year bond auction, negative 19% on the yield of that. So again, don't know why you'd want to buy that. But then we get down to the some of the US numbers and the trade balance from Canada as well. So trade balance from Canada pretty fairly stable at negative 2.5 billion. So they are currently running a trade deficit, and looks like they are, generally speaking, been in deficit right up until the financial crash. Yeah, and really, you have to wonder whether this is, has a big chunk to do with oil. But if you look at the price of oil since the financial crisis of 2009, it really has plummeted, and you can see the effect on the Canadian economy because of it. So, or certainly on Canadian trade, the trade balance. So the trade balance in Canada, not as stable and flourishing as it once was. Unemployment claims slightly down in the US, and I think that's a weekly number. So this is the past week. Revised non-farm production quarter on quarter down. Now, didn't we look at this before and wonder how can it be productivity is above this number and yet red? But I don't know. There's a flip in that. Annualized change in labor efficiency when producing goods and services, excluding farm. Actual less than forecast is good. Maybe I don't know. For some reason, they don't want efficiency.
Yeah, it's hard to work out, isn't it?
It is. I don't get it. Revised unit labour cost quarter on quarter is also down. So that was suggesting that wage inflation, I would have thought that's what that number is suggesting. Wage inflation isn't so hot. That can't be good for the dollar. Trade balance in the United States, negative 63.6 billion. But again, you look right back on the chart of that, and you will see that the trade balance in the US is usually pretty poor anyway.
Actually, I'm surprised, frankly, that although when I think about it, and what Trump has done since 2016, how's that look since then? 2016, yeah, it hasn't. It's only gone down, really, hasn't it?
Yeah, the trend is definitely lower
at the end of the day.
Yeah,
I would have thought that that may have improved under Trump, because that's his mantra, really, isn't it?
Absolutely is.
Make America great again.
Yeah, absolutely is. And if you look at when Trump came in, as you say, in 2016, there was actually a little pop to the upside in the trade balance. It was starting to improve. Hold on a minute. He came in he came in here, didn't he?
November 2016. Yep.
Yeah, no, that's November. So yeah, ever since he's been in, that was the I guess the last month of Obama, and the trend actually from 2012, which is when Obama came in, to 2016, you could say that the trend was probably just about edging up with Obama. So it had a better trade balance. Yeah, but since Trump, I don't know what he's got to brag about, really, when it comes down to that. So,
oh, no, we're doing very well. In fact, we're doing marvelously well, and we're going in the right direction. In fact, we're going incredibly quickly in the right direction.
It's terrific. Yeah, absolutely, it's terrific. Yeah. So that's what's really going on there. Numbers don't lie. We got the final services PMI out during the UK show, and then the big one, ISM non-manufacturing, which I suspect that's going to put things on hold. But I don't know. Could you garner from the rest of the numbers that we've had today that this is going to be a weak number? No, you can't. You just have to wait for that number to come out. But if that number comes out weak, then I think some shorting opportunities may well be prevalent and be in the market. Euro's picked up against the pound, I see, mate, which is slightly surprising. I suppose no numbers have been particularly good today.
Well, you've got to have retracement as well, mate. You can't go in one direction, so it wouldn't surprise me to see it come back to the pivots and go.
You certainly can't go in one. Apart from this, so you got apart from
the Nasdaq, that's right.
The Nasdaq easing to the downside right now, and I said earlier that if I was going to short anything, it'd be the S&P 500, and it would be pretty well against the grain. But I did like it for a potential short. and it's easing down, but it's not really kind of showing us too much. But it has come down from the highs. That would have been the selling opportunity right up there. So it is probably down about 1% from its very, very highest point, sticking around about that daily pivot, but looking a little bit tenuous today, mate. Market's looking a little bit stretched at this particular stage.
Yeah, look, I'm of the opinion that we're in transition phase, and whether that transition means it's reversal or deep retracement or deeper retracement is yet to be determined. On that chart that you're looking at right now, that's a case in point. You know, we're at a potential bounce point, but is it deep enough? Great question. I don't know, and we really can't put a definitive answer on that at the moment, I don't think, and that's across just about everything that I've been looking at myself. Yeah. I've got into a few positions that suggest if we are reversing, we'll do okay, but if we're not, then the retracements will end fairly quickly and we'll go back to trend, and I have to go join the queue again and wait for the next one. But yeah, I'm hopeful on a few that we'll pick something up anyway.
Yeah, moment, I mean, we're in an uptrend, aren't we, mate? That's the bottom line. We're in an uptrend, and a very, very powerful uptrend as well. You know, it's been fairly unrelenting ever since June. So you know, we're looking at a good 3 to 4 month run to the upside. I mean, that's it's pretty spectacular, and you could really go right the way back until to March and say, you know, we've had 2 legs of upside, and I'm sure Elliott wave theorists would have a field day about this right now. You know, what's really going on in the market, and I'm sure they'd say that. Well, I'm not sure, but I guess they'd say that there'd be a third leg higher before we saw a really significant reversal of any type. So you know, if there are any Elliott waves guys out there that know the Elliott waves theory substantially enough to make a genuine comment, then I'm interested to know what they think about it, because I know it does potentially run in 3 waves, doesn't it, with some ABC cycles in the middle.
Don't know, mate. To be honest, I've not studied any other form of I'll call it quantum theory. Can I call it that? That just haven't been there.
Yeah.
And I should. I know I should. It's a failing of mine, but you know, sometimes you just don't get the time to spend looking at other stuff, and this is one of those, I think.
Yeah, I think you're right, mate. So, is there anything that we are preparing for the US show? Is
look, tons of stuff, really. You know, from my perspective, I'm expecting, as I said, those potential reversals, potential retracements, whatever they may be at this point, to give me something out of them. The Euro pairs and the Aussie pairs in particular, I'm very, very keen on, and I can show you a few of those if you want.
Yeah, let's have a look.
Righto. Let's start with whatever chart I'm on. Dollar CAD. I don't want to talk about dollar CAD. I've had one of those weeks, Ash, where if I was in front of the charts at the right time, I'd be doing marvelously well. But because I haven't, I'm struggling.
Yeah.
Not losing anything, but yeah, struggling. Just it's got that little niggle where I'm not making the money I should be. Anyway, what I see here is A Tale of Two Cities. Is that who wrote that?
A Tale of Two Cities. I know that the story of the Prince and the Pauper, which is sort of similar to that. I don't know if that's the same thing.
No bloody idea.
Yeah.
Tale of Two Cities. No, it'll come to me. I think it was Italian. Could be wrong. Anyway, what I see here is the definite propensity for this to go short. And I'm kind of waiting because I see a setup here that I would like to trade, but wrong part of the cycle. Got to see a pullback here, and I think in many ways we are seeing that on smaller time frames. 4-hour chart is interesting, and I said, I think, I don't know how many shows I've been in, but I've said that if we got a bullish decisive bar that actually came back to the pivots here, I would definitely look to trade this short. I can't go short here. It just doesn't work for me. And I'm not saying that the market can't go short. Of course it can. But this magnetic force up here is just amazing. And I can't believe that price won't edge its way towards that. If not actually get there, it'll certainly edge or stop going short. You know, that's the mantra that I've got. If there's an electromagnet sitting here and price is sitting here, well, I really can't see price going away from that area at this point. Although I've got a really cool setup here, but on balance, we've gone a fair way down. We need retracement, and those pivots are very, very, very much a part of that equation. So I'd actually be prepared to trade that long to go short. Problem I've got is I don't as yet have a setup to accommodate that. That could come with a false break of support, which I've now got. I've got a support line here. So if we got back under here and then found their way back above and retested that area, then I've got a reason to go long. But at this point in time, it's just, nah, I've got to wait. Maybe that bar there was the one that we needed to find. And again, that comes back to timing, and I'm not in front of the charts at that time, so I don't get to trade that. But that was the one. You know, you've got a bullish engulfing bar here, and then you've got a higher low with a black candle. Perfect. That's what we're looking for. So I've probably missed the boat on that in terms of getting the best entry, but that doesn't mean we can't find one a little bit later. So I'm still looking at that quite closely. And as I say, it may come in this area here. We've got a nice little confluence. So keep your eye on euro dollar. I am keen to go long to get short. If it goes long first, I don't mind. I can still look for that lower high on the bigger picture. Euro Aussie, that kind of peeves me a little bit as well, because again, I was looking for this to come back into the range, and that range, of course, is on a far bigger picture than what I'm looking at. This one here, and looking to trade that long, definitely back to the pivots again. The pivots are very, very much on my mind today, and the reason for that is on a lot of pairs, they haven't even been tested. Certainly the weekly and the monthly haven't, because they're, what, 2 days old. So there's no surprise there, but they're still magnetic to price. And this looks very much like it does want to go in that direction. We are coming off the bottom of the range. In fact, we've come back inside it, but price hasn't given me that pullback that I need. And again, this is a very common theme. Those pullbacks are crucial to finding an entry the way I trade the market. Maybe there was a little reason for an ABC here long. I totally get that. But again, I was having dinner at that time, so too late for that one. What else have we got on the, and all the euro pairs are the same, and I did mention the Aussie pairs. Let's have a look at those. Exactly the same scenario. We've got untested. Well, have we got an untested daily pivot there yesterday? Maybe we do, maybe we don't. But certainly we have got this kind of scenario. If you believe in well, I won't even call it a head and shoulders. I'll just call it a toppy situation. And when we've got a toppy situation, we've always got a neckline, and that neckline has been broken and retested. You're looking for an entry off that somewhere, somehow, and whatever floats your boat in terms of finding an entry into the market, that's what you're looking for pretty much every single time if you're looking to play reversals. So it doesn't get much better than that, except if you've got a daily pivot test. Now, it could be argued that you already did get the daily pivot test, and I really can't find anything other than price has actually come to the daily pivot rather than the reverse. Sorry, the daily pivot's actually come to price rather than the reverse. But it's a big question mark on that. But there you go. You know, that's exactly what you're looking for. And as you would expect, the pivots are holding price up very, very well at this point in time. That said, same as I said on the euro, if we could get price back up to the pivot, then I'd be looking to trade that short. The Aussie pairs are very, very similar, and this one is stuck. And if you don't take anything out of what I said about the pivots being magnetic to price, then there's a case in point. Once price comes to there, it's stuck like glue to the weekly and monthly pivots. What I would like to see here is definitely a rally or a breakout back to the daily pivot, a lower high, and I would look to trade that short back into the range. That is pretty clear to me. So that's probably one of the most interesting ones on my watch list at the moment. A little bit of a push to the daily pivot, then short. Aussie Kiwi, on the other hand, we have traded long, and we're in that position at the moment. And as you can see, we're one pip out of the market. My goodness, this is very much a play on. If you have a look at the bigger picture, what I said on the Aussie US dollar, very much a play on. We're a little bit oversold, so we're playing a pullback really to get short. Now that pullback, as I've got my first target here, which is where I'll take half of the position off, is in the first instance the daily pivot, and that's probably the place I'd look to go short in the first instance. But there's also a bigger level above here, which is represented by 108.93 as I've got it, but it's also the monthly pivot. So I think there could be a deeper retracement here before this goes short. And if that's the case, then I can make some money on the way up and then try and make some money on the way back down. But I do think this has got a bit of an issue in that the Aussie news that we heard earlier in the week, which was a poor GDP figure. And I've got mixed feelings on that too, I've got to say. That GDP figure, whilst it was not good and Australia entered recession for the first time in 28 years officially, the market has kind of spoken on that maybe already, and we've seen that in the sell-off that we've seen the last day and a half or 2 days even. I'm struggling with that because whilst it was a bad number, of course, and a record-breaking number, it's also in context a decent number if you compare it to all the other, certainly OECD countries, but any developed country who's struggling with coronavirus at the moment, and their GDP is far worse than what is Australia's. So from a comparative level, and if that means anything on a currency pair basis, then I've got to say maybe that's not such a bad number for the Aussie. The market has spoken, however, and the Aussie has come off its highs. So if we do get lower highs, then I'd certainly be looking to trade it short. So this play on Aussie Kiwi long that I've got at the moment may well be very, very short term. And we're just struggling here. It's just not going anywhere, frankly. And I'm getting the SH12s with it fairly rapidly. I may just close it pretty shortly. We'll see. We'll talk about that more in the US session, I guess. So that's kind of the theme, Ash. It's okay. Are we retracing? Are we reversing? You know, that's a perennial question that we face pretty much every day of our life. So I guess nothing's changed in that regard. It's just a matter of lining up the ducks and seeing if they're all swimming on the pond.
I agree, man. And actually, what I am definitely seeing today is whether it's a reversal or retracement. I am seeing a bit of an easing back with some of these equities. You know, we're seeing the Nasdaq down, the S&P, the Dow, the FTSE, all of them over the last hour or so have just eased back a little bit. So there might be a selling opportunity, but I would like to wait for that ISM number. I would sell the FTSE if it's high before that number, but otherwise I'm going to have to wait. But let's come back to that during the US show, because I want to bring everybody a really interesting product that I think could be something could be something for us all to possibly jump on board with. So we'll do some analysis of something else that we've never discussed before. So for those of you that have joined us in the this quick preview, thanks so much for joining us. We will Be back tomorrow. No, we won't be back tomorrow. We'll be back next week now. Next week on Monday.
Yeah. Hey, it's Friday tomorrow.
Yeah, Friday tomorrow. How you doing, Wan? By the way, hard time. Charles Dickens. Yes, so Charles Dickens is that Tale of Two Cities. Apparently.
Yeah, Chuck Cock. I forgot about him.
Yeah.
Got it.
Yeah, Chuck Cock is the man who wrote that. Hard Times. I remember reading that book. Charles Dickens used to have a wander around London before he put his pen to paper, and that's why he's so amazing at his descriptive writing of what goes on with London. He was walking around London before he started and observing.
He didn't think of Chuck Cock, though, did he? He certainly would have named himself Chuck Cock if he thought of it.
I think if he was American, he probably would have done. Okay, so we will see the rest of you next week. Thanks so much for tuning in, guys. For those of you in the US show, stay tuned, and we're going to play a quick tune and be right back to the product that I quite like to introduce you all to. So,
have a great weekend, guys. We'll catch you later.